and on issues of investment and intellectual property. And what Trump is basically, up to is trying to target countries with whom U.S. has a trade deficit. And this whole issue of U.S. Having a trade deficit with India has been, has been a bone of contention for the past 2 years. So I think that India could be in the firing line on the issue of IP. Very soon, the special C01 report is going to be out, and I'll be very surprised if India is not targeted. So my view is that India must approach the WTO, and we have actually that already earlier, and we need to take up with the WTO, because Mr. Dua was mentioning earlier that we are in a rules-based organization.
Mr. Dhar, we'll leave it at that. Thanks much for coming on board and giving us your perspective as to how India could also very well be a casualty in the ongoing trade war between the US and China. And Mr. Dua also, we'll let you go at that. Thanks a lot for joining us with giving us your perspective on this trade war situation. Let's go across to our guest then, Mr. Sunil Subramaniam, who's been waiting by. Thanks a lot, Mr. Subramaniam, for giving us your time. We're seeing markets react negatively to this flow of news from China. They have, neck-to-neck sort of a war that is going on between the US and China. China has also retaliated to the developments that happened overnight in the US. Tell us, what is your view on the Nifty, and what kind of a move can it see given the kind of massive global volatility that we're currently witnessing?
I think in the short run, there's volatility here to stay. So when we say volatility, generally the interpretation is that it's going to go down. But I think I'd like to point out that volatility works on both sides. So I think in our view, the Nifty, while it could touch new lows, could also touch new highs, because the reason is that there's so much news flow. Now, first, just to bring a point on the tariff war, I have a slightly contrarian perspective to what the two earlier speakers spoke about, right? So for me, the 2-3 things here which are different for India. One, India's deficit with the US is less than 10% of what China's surplus is, India's surplus over the US. One, so we are a much smaller. We are only 9th ranked in terms of the deficit. The second point is that from a this is a US move which is driven by the November Senate elections which are due. So I see this more as a political rhetoric move. Trump needs to, for the Republican Party, needs to win the November election. Otherwise, if they lose the majority there, he'll become a lame duck president for the rest of this tenure. So Trump needs to secure his vote base. So part of this is driven by the political rhetoric. So after November, we expect this tariff thing, I expect it to ease off. Third thing, and most important, is that in this there's an opportunity, because ultimately, though the US is putting these tariffs, the fact is that the US consumer is not necessarily going to pay the higher prices for US manufactured products. So there, if you see, China's per capita income today is 4x that of India's per capita income. So the whole point is that India, there could be an opportunity, provided we do a calibrated response as an economy, right, in manufactured exports, because with 1/4 the cost of China, we can pitch in and provide cheaper products. So I think there is a nuanced approach to this, and not necessarily totally negative from an Indian economy point of view. So I think, that being said, for us, from a Nifty perspective, while the news flows from international due to tariff and others could be negative, the second aspect is that domestically also the election results are a huge factor. So why I said volatility is that if the Karnataka election comes positive for BJP, market could touch new highs. If then the comfort that the Modi government will come back to power comes. So let's not take this volatility as a one-way down street. Depending on how the results pan out, we could even see new highs coming through in the market. So I think this is going to be a volatile period, and for a long-term investor, a steady accumulation of stocks or mutual funds at this point is going to benefit them over the longer term, because the economic footprint for India is pretty sound.
Exactly, that's what a lot of experts have pointed out, that the basic fundamentals look extremely strong. So probably from a long-term perspective, we could see a leg up for the markets. But given the volatility, Mr. Subramaniam, what are some themes that one can look at present market situation in the medium to short term sort of a view?
Yeah, so everybody's portfolio should ideally be a blend of the short term and the long term, and in the short term they should go risk averse, in the longer term they should take more risk. It should be a highly polarized portfolio. So what we would say is, in the shorter term, consumption, auto, rural, so the monsoon prediction is coming out normal. So these are the sectors which will provide a defensive, because earnings growth is already growing there, and with an election year, spending by candidates, by political parties in rural India increases dramatically. So you are going to see the consumption really grow strongly. So that would be the defensive part of the portfolio which will protect you from volatility. But with a slightly longer term view of 3 to 5 years, infrastructure and capex, because the reason we are saying this is, as the consumption grows, the capacity utilization in the Indian economy is going to rise from the mid 70s to probably the early 80s in about 12 to 18 months, and then you'll see private sector start to build fresh capacity, and then you'll have capital goods suppliers order books going up, you'll have demand for steel, demand for cement, right, and EPC contractors going up. So we believe that over a 3 to 5 year, the infra and the infra related pay and the infra related commodities of cement and steel will deliver very good value for a longer term investors. So the portfolio should be a blend of these two components.
Very rightly said, Mr. Subramaniam, and wish we could chat a little longer, but we're a bit pressed on time. It was lovely chatting with you and getting your perspective on how to play out the current market scenario. Thanks a lot again for joining in. We'll slip into a short break at this point of time. More lined up on the other side. Stay tuned.